Welcome, everyone, and thank you so much for listening in. Today, we're going to talk about US-China tensions and how it affects investing. But before we get started, as a reminder, this is an educational show and should not be construed as personal financial advice. Full disclosure information is available at ototnow.com. Now, let's get started. So, we're currently in a situation where there's increased tension between the US and China. But for the purpose of this podcast, what I want you to think about is anytime there is tension between the US and another country, is how can that affect the overall market as a whole and how it can affect some specific investments that you have personally. So, in this specific situation, yesterday, the US Secretary of State gave a speech, had some very harsh rhetoric versus China. And in addition to that, the US kicked the China consulate out of Houston. Immediately, China responded with some rhetoric that said we are going to retaliate. And then last night, so if you picture in the big time frame, we're thinking 12, 16 hours later, and again, they're on the other side of the world, they took action to kick the US consulate out of the Chengdu province. So that happened. And what you want to look at from an investing perspective is there's the relationship between any two countries carries what's called country risk. And then secondly, another risk to your portfolio is what's called legislation risk. So there's what everybody's saying and the inherent differences between two countries, different types of governments in this case, and that risk. And then secondly, what if the US or the other country puts some law in place that affects your investments directly? So that's what we're talking about today. What I want you to think of, though, as far as your portfolio, is things like this can bring the overall market in some. So it can cause a lot of selling as people go either to safety or to cash. So when you think of US investments in this situation, you want to think, well, first of all, it's never good when two big major countries are kind of duking it out in the press. So that's going to cause some selling. And we saw that yesterday, the tune of a couple percent. And we're also seeing that now today, some more selling. But there's lots of other factors at play. But you want to look at, from a US investment perspective, what companies do you have in your portfolio that have supply chains tied to, in this case, China, but if it were another country, tied to whatever country's out there. And that's kind of hard to determine. So you might have to do a bit of research and check out, like seekingalpha.com has a blog to where Apple, for instance, I just read an article that about 20% of their supply chain is in China. So if they are now all of a sudden with the legislation risk side of it, there becomes a law out of the US or China that, that stops that supply chain from happening, then obviously that's, in Apple's case, they would have to find a new supplier, which takes time. And then all of that process has to stand up. So you can see how there could be a long-term ripple effect into the stock, which could lead to a significant downturn in the stock until you hear more good news out of the company on how they fix that. So those are the sort of things we're talking about with US investments. But you also know that you can invest in a Chinese company through an American depository receipt, or an ADR. So in this case, let's say Alibaba, which is, again, the Chinese Amazon. It's actually bigger than Amazon. And it is involved in a lot of different things, much like our Amazon is over here, but certainly it's a major company over there. And if you're investing in Alibaba, now that can take a hit because of, in the US market, since those are US dollars, a lot of the money will move out of those names for two reasons. A, there's negativity in the press, so there's headline risk, if you will. And then secondly, people may be pulling money out of, not giving American capital to China on an ethical basis, or whatever they choose to, but you'll see money move out of those names, which means, of course, those names will drop. So that's really how you look at it from the lens of US investments and Chinese investments that you're invested in as a US investor or any other investor in the world. So those are the series of events that happen, and the legislation and country risk. But you also need to consider that whenever tensions flare up, it's also not the only thing going in the market. In our particular situation, at this particular time, the market has run up significantly for almost 4 months, almost in a straight line. So that obviously we're kind of due as a market for the market to sell off. So when you get a two country, the China-US tension headlines on top of that, it can just kind of accelerate what might have already happened anyway, as far as some selling, which in this case, it's more profit taking than necessarily, selling to get out of the names, but a combination of the two can take the market down a little bit further. Also in our situation here in the US at this particular time, we're 3 months out from a major election. So when you sprinkle that on top, if people go into safety going into the election, that could be another pressure. We're still working with COVID-19 and the second wave over here in the US, which is causing some concerns with, again, the California governor shutting the state down for the most part. Didn't see many other governors follow suit, so it didn't hit the market as much as it would have had several other governors, like the Texas governor or Florida governor, started shutting down. So we have that going on. We also are working through some social unrest issues. Even though we have sports coming back as over here in the US, our professional sports, those sports are also avenues for being able to demonstrate, and that brings some divisiveness, if you will. So that can also hit the market as well. We also have the next round of stimulus that should happen, maybe, maybe not. And if it's not the right type of stimulus, again, all those things can affect the markets. So it's not just the country risk between the China and the US going on. It's all those things baked into the overall piece of the puzzle. So to recap, anytime you are as an investor, there's an issue with the country, in this case, China, the two biggest economies in the world, obviously that's going to affect the markets. So at the beginning of the tensions, that's when you want to make your decisions as to what you're going to do with your portfolio. I personally am not too concerned. I don't think this is going to go into a larger issue. However, I do think in the case of a Trump re-election, that there is going to be an issue between the US and China, and that could hit the markets pretty hard. So going into the election or right after the election, if it looks like Trump's getting elected or he does get reelected, then I think you'll need to, I'll go through each of the portfolios and kind of look at those names that might be affected by increasing rhetoric on China as he enters the second term, which could lead to, again, a more aggressive stance and making this more of an issue than it already is. So that's all I have for you today. Please reach out through OTOTnow.com with any questions or comments. Thanks again for listening in, and here's to you fighting the good fight every day to be on time, on target with your financial goals. Bye.